City's a good team.
Right, ladies and gentlemen, welcome back. Chart Talk episode 82. Shouts out to nobody because I don't know any numbers there. So let's jump right into the market outlook. So, we got a big bounce back today in the market. The S&P closed up about 1%. We began to see the pullback start to come in as the last 2 days, Monday, Tuesday, the market was weak. We began to pull in a little bit. It seems like at this point everyone's waiting for a pullback. It's no secret we're at the top end of this range in this SPY uptrend. And, this is what the market does. When everyone wants a pullback, what's it do? It doesn't let anyone in, and it continues to up move. So that's kind of what we saw today. I'm still not, 100% risk on or anything like that. Definitely still waiting for better opportunities. And this is the time where it's we've learned over the years is the time to not really push it as, the couple weeks leading up to the thick of earnings season, where most stocks are just waiting around for earnings reports to really make a move. And otherwise, they're mostly just moving with the market at this point. So right now I'm still very selective, still keeping the risk pretty tight. But the market closed strong today, and it looks like we could have some follow through tomorrow with today's strong action. So on a short-term basis, still looks pretty good, but I'm definitely not gung-ho, balls to the walls with risk. What are you thinking over there, Bennett?
Yeah, same thing. I think the main thing is to the downside of below 410 on the SPY. Definitely could be a time to take some risk off the table. And we're in that very tight range. It's like all-time highs is 418. The really tight pivot low is 410. So, as long as we stay above 410, we're good. Below it, time to free up some cash.
Yeah, definitely.
All right, so you want to jump into some of the top ideas?
Let's jump in.
All right, so first one we have this Chewy, CHWY.
Chewy.
Just...
Yeah, this is setting up for a really nice support buy. I had it last week in this area. I did take a bunch of profit off, so I didn't really get hurt in the down move. But this support buy is now setting up. Very, very good entry now. You look at the 200-day simple moving average here, support. You look at this massive horizontal support. And it had almost an inside day at support. So you buy through this area with a stop at lows. Looks pretty good.
Yeah, I liked it a lot. And we haven't really seen a lot of support buybacks recently since everything has been going. So it's definitely one that's there. Next up, we have this PDCO.
PDCO, very, very macro setup, this one. This is one you throw in the long-term accounts. You don't really overmanage it. I'm not staring at the tape every day in this one. This one is when it triggers, you set a wide stop and you let it go. You're not quickly looking to take profit. This falls under the same category as NOC did when we were buying in this area. You're playing for the macro move in this one for when it does finally break. But it looks good.
All right, AAON.
Oh, nice little support buy setting up right here. We see this previous resistance area turning to new support over here. Some 2 or 3 week consolidation here. Looking for an entry through 70 area. That one looks pretty good for a support buy as well. The other thing coming up, our earnings May 6th. You got some time. Still looks pretty good.
Yeah, next we have Mo's old favorite, Hasbro.
Hasbro. Yeah, really nice macro level setting up here. We see this uptrend that's been on since last June or whatever it is, and now it's setting up really nicely below this 100 level. They got earnings. So they got earnings April 27th, which is next Tuesday, so probably not the right amount of time for this kind of macro setup. I'll revisit this one after the earnings come out.
All right. Next we have Hewlett-Packard, HPE.
Oh, HPE. Yeah, 16. Yeah, this one looks really nice. Just a really high type bull flag here. Very strong uptrend since it bottomed last November. And, we don't usually gravitate towards these cheap names, but this one is special because the chart looks really nice. So if we can finally break above this 1610, 1620 area, looks like it should break out pretty well.
All right. And then last up for your ideas, we have this BBY.
BBY. So this one's still setting up, this macro chart. We could see, the resistance level overhead. It's in this wide area. The more it tightens up near this resistance level, I think the better it looks. But this one definitely needs time. Mm-hmm. I got a few. Let me go through a few I'm looking at.
Of course.
This UPST was one of my favorite names, favorite earnings reports. Just absolutely explosive growth. Looks like it's finally bottomed today with the bullish engulfing. So, watching this one, 101, 102 area tomorrow, you got to give it to this 89 lows. Very wide name, but making $50 in this name is not out of the question as it's a very high beta name. So I like that one. This YALA, this Yala, this is starting to look better and better at support. We see it wedging here at the support area. So if it can break above this 24 area, definitely looks pretty good. Etsy. We loved this Etsy last week when it began to break out. Now it came right back into that area. Still here holding the 100-day moving average. Gave a little inside day at support. So I'll look for a 211 to 212.50 support buy in that one. What else? And then lastly is this net. So this net exploded on a deal with, NVIDIA. They had a big deal with NVIDIA. That's why they exploded this day. They're going to use their systems to build out their own systems pretty much. But from a chart perspective, it's looking like it found some support. Watching the 74, 75, 75.50 area for a little bounce back trade. They do have earnings coming up May 6th, but that's 3 weeks away at this point. So I think that's enough time for a bounce. That was really it. Where do you want to go from here?
So the two I'm keeping an eye on is, first one is SCL.
Oh, yeah, that one has earnings coming up, though. I was looking at that, too.
Yeah, 27, same thing, so next week.
The chart is sick, though. This chart is so beautiful.
Yeah. So this one...
I had this on my list and deleted it for earnings. You go.
This one I have a buy stop limit in. So if it wants to go through 132, the opening range breakout on earnings, I'll get triggered in through it. But if it opens up at 135 or 140, my order won't get triggered. So I do have a...
What's the range? What's the range of your buy stop limit? 132, like 132.10 or what?
Like up to the quarter.
Up to the quarter,
yeah.
132.
I just really want to be into that. I want to be in through that breakout, up through the figure. I don't want this name to gap up, to some random price. Yeah, and then you're giving it 10 points. So, and we've seen a lot of even like for NVIDIA. Again, this is like years back. They had like those through all time highs. It had that opening range breakout through that level, and if you just got in that day and held, you we're in for a phenomenal. But again, this is a way different name than NVIDIA.
Yeah, you gotta explain that one because I don't know where that is in the chart.
It's way back. It's when it was like still below 100. But anyways, the other one was this ROK through this 268, 270 area. Another name, kind of blue, not perfectly blue sky. Cause again, the real all time high is at 275, 276 area, but it is just getting kind of tight in this range versus like 260. So these are the two that I've been keeping a little bit of a closer eye on this week.
Nice. That's solid.
All right, so those are top ideas. We can jump into good and bad trade.
Oh, you start.
All right. So I actually have quite a few. If you want to pull up the charts. Pull up the first one is going to be Amazon.
Got it.
All right, so this one I've been in for quite a bit. I kind of got trapped in it, but again, it's Amazon. It's not like getting trapped in a cheaper name. So I kind of got trapped in it as it kind of came into support, picked some more up versus 31, and then let it kind of base out and bought back up through 3,100. And then we got this very easy or quick move back up in the upper end of this range, this 3,400 area. So after it was, what was it? It was like 7-8 days in a row, just running up into resistance. We saw this tiny little doji at high. This was a perfect time for me to, kind of look to take some profits and kind of get out of this trade because again, I was trapped in it from, 3,300, and I did average down and was able to, get some out. It still looks great in time through 34, through those all-time highs, but this was just a name that I kind of had to get rid of the higher cost basis stock when I had the opportunity and kind of take some profits from the ones that I bought up near the support area in that range. So not really the best trade, but it was one that, a couple of years ago, I probably would have lost money in that, I just kind of sat with, waited for some better setups and, sold it into the upper end of the range. Next one, if you want to scroll over, Shake, is AMD. The big, a lot of our big focus the last few weeks has been a lot of these support buybacks. A lot of them been working very well as the market has, been breaking out. But again, they don't work perfectly all the time, and AMD was a good example of that. We bought up through 78 versus 75. And I was actually looking to buy up through 84. I had a buy step in to add to this. It just never triggered that day. And most of us that were in this AMD trade, we moved our stop up first. That 80 pivot, we got stopped out. We made the $2 in it. Had we given it back to break even, we probably still would have been in. But this still looks good through 84 in time. So made a little bit of money in it. And we'll keep it on the radar to look to buy through that 84 in time. Next is MLM. If you want to scroll over one.
Yeah, I'm good.
Yeah. So again, this was another, a lot of these, the two main points of my trades have been the support buybacks or blue sky breakouts. This MLM was a blue sky breakout. I was looking to buy it through 350, but again, I'm expecting a breakout to new all-time highs, and I just saw these two little doji at high, just some indecision, just showing me that the name really wasn't ready. When I bought it through 350, the original stop was versus 340. It's technically still fine, but it just didn't have any follow through it. I took the break-even stop in it, and now looking at it, you can kind of see 352 is probably more of the proper area to kind of keep an eye on. So now I still have no problem buying MLM through 352 versus 340, but it probably just needs a little bit of time. So
nice.
Next, again, TTG. Again, same thing with this MLM. Blue Sky Breakout. Bought it through that 620, but again, didn't really get the follow through. It went 10 points. 10 points and $600 name really isn't anything significant. Went to 10 points. I was initially giving it versus 600, so my risk initially was 20 points. It only went 10 points in my favor. And again, for this breakout, we're expecting some momentum. We're expecting some follow through, and it just wasn't there. So this is when I took the break-even stop on it, and 3 days later, I would have gotten stopped out for that 20 point loss anyway. So again, the MLM and this TTG were both those blue sky breakouts through all-time highs. It just didn't get the follow through, and I just took the break-even trade versus giving it back to the proper out. Next up is this VRTX.
Got it.
This was, again, me and Con have been kind of keeping an eye on this 220 breakout, this base breakout in VRTX for quite some time now. Got into it. We saw that it was holding that 208, 209 area, added up, through 215, but again, just didn't have the momentum. It has earnings coming up in a couple weeks. This isn't a name that I'm going to look to hold into earnings if I'm, barely 1 or 2% higher than, my cost basis. So when it really didn't have much momentum through that 220, just took it off and kind of going to move on to other names. I definitely was in that for way too long. Continuing on, again, a lot of these trades, I've been on a lot of these for a little bit, and I've been kind of clearing out a lot of trades this past week as the market's pulling a little bit. So next one is this W Day. Again, just a textbook breakout. Just didn't get the follow through. Both through 260. Went about 8 points in our favor. Came right back, and just took this one off. This is still a trade that through 260 I would take that trade again, since I lost nothing in it. And those were, again, the trades that we've been in for a little bit, but the main two have been just sport buybacks and the blue sky breakouts. And for all these, most of them small winners or break even. And then the rest of the swings that we still have on, when I get stopped out, we'll go over them next. So, Shake, what do you have going on?
So, everything in my long-term account is just absolutely crushing it. We still have the UPS we've talked about from this 160 area, the Walmart from 130, that's still rocking. So that's my long-term account. In my active account, I know where we are in the SPY range. So I'm looking at right now a lot more quick trades, 2 and 3 day trades, things like that. That's what I did well here. So Tesla, for example, I bought this Tesla last week. I bought 688 and I had a 682 stop for 3/4 of my stock. So I only had $6 risk on that stock, and then I sold into these 2 up days, and then what I did well was, on this 3rd day higher, where it ripped to new highs and then reversed. Actually, you can't tell. It was at 788 pre-market. It made a high of day at 780.79. So once it made new highs and began to reverse, I just sold the rest of my position. It was just a quick 2 and 3 day cash flow trade. That's kind of what I'm doing with, kind of scalping swings in my active account. I also did it, and then I'll give you the lucky trade of the week. This FUTU. So again, I'm looking for more quick trades. I know where the market is on the risk range, at the top end of the range. So we bought this one through this 157, 58 area. You can see, it just blasted off in the open. So I bought this thing pretty much 9:30, and I was out of this thing, but I sold into these highs at 10:30, 11, whenever it was. It was literally a 90-minute trade, and I took my money. And here's the give and take, where I just sold into these highs. So I missed this move, the huge move on the day. But then the lucky part aspect is they came out with a secondary offering the next day. Mm-hmm. And I didn't have to deal with that at all. So that was just very lucky. But again, I'm scalping right now. When you're scalping, you have to really worry more about win percentage and batting average compared to risk reward. Mm-hmm. So again, I missed out on the meat of the move. I only sold half the day's gain here. I missed out on half, the move to above 170. But again, I didn't get, succumb to the next day's pain of that secondary offering.
Mm-hmm.
And then my bad trade of the week, which, it's not a terrible trade. The risk reward was on my side. I was just going counter trend. I had some, I had some long exposure. So this day here, we began to find some weakness. What was this last week? April 14th. So I tried to short the SPY here. Kept it way too tight for really the trade probability. I went off the previous day's highs. I shorted 412 versus 414. It was the first red candle we've had in like 3 weeks at the top end of the range. It made sense to me in that regard. And then, the next morning we just gapped up and I was out of it, in 10 minutes. I was just kind of, going counter trend there, trying to get a cute trade off, and it didn't work out well. So, that's not that great of a trade. But again, SPY's at the top end of the range. I don't really want to be buying too much for the long term, looking for a pullback, waiting on earnings. So, that's really my sentiment right now. Kind of hit and run until we get like more of a major pullback or we get some really good earnings setups that I want to sink my teeth into.
Yeah, no, I definitely agree. And like for you, doing more like the scalping, like for me, it's been being more aggressive with being willing to get a names break even versus the proper pivots where those have been working so well the last month or two. Or recently, if I was in 10 names a week ago, I'm in 5 now that are still fine with UPS, MMC, PHM, DHR, and AbbVie. Right. The other ones, it's like as they're coming back to the price, it's like I don't want to give them the 10 points or the 5 points, whatever it needs to. Where it's like, I rather just keep the money and keep that cash available for those next ideas. And when we're scanning, it's right now I have 2 orders in the system, but like you mentioned, with earnings coming around the corner. It's like we kind of have to just wait and wait for earnings season, let a lot of these names have earnings, and then, get back into the swing of things.
Right.
All right.
You want to hear an interesting fact? I heard you mention AbbVie, ABBV. They've got a 5% dividend yield.
Yeah.
It's pretty fat.
It's an old pharma name. It's like Pfizer old. I mean, we don't only talk about dividends.
Pfizer's only like 3.5. Yeah. AbbVie looks like it's about to break out with a 5% dividend yield. Shit.
Yeah.
Shit.
Now, if you want to do like some really crazy math, if you go back to like when AbbVie was, a $20 stock, $30 stock, and if you still had it relative to what that, so that's gonna be,
it's like a fucking $25, 25%.
Yeah.
I mean,
those are always the fun ones when you can like figure that math out. But all right, you want to get into book of the week?
Let me start. So I just started reading this book called Contagious by Jonah Berger. Why Things Catch On. It's all about talking about how information spreads, how word of mouth is, the most profitable marketing there is, and things like that. It just goes into. I'm like 40 pages in. The first story he went into was these guys out in Philly. Everyone knows Philly cheesesteak is kind of like street food, right? So this one restaurant. They got the word of mouth up by selling a $100 Philly cheesesteak, and it would be Kobe beef, this homemade bread, all these different things. But it was really more about getting the $100 cheesesteak to tell people about, and that just made it become like one of the most popular restaurants in Philly. And that's just a good example of just what this book's trying to show. Where, it's all about marketing, how you market things, and the prices that are associated with. It's all consumer sentiment. And 2, just, word of mouth and social transmission, how really it's, the most impactful way to market and really get people to trust your good or item or whatever you're selling.
There was, I read that book a while ago. I think there was one other food item. I can't remember what it was. Was it like a crazy, like lobster, what the hell was the sandwich? I don't know if there was one other example in that book where they talk about like the crazy foods where it just was like, that's what you went there for other than the cheesesteak. But I'm forgetting that because it's been a while, but.
I was just gonna look it up real quick. All right, you go.
Anyway, so finally finished that the silver book. So I started
Henry Hunt.
Yeah,
Harry Hunt.
Finally finished it. Yeah, 400 pages to get the 2 pages of the silver trade. But so I started Anti-Fragile, and I put.
You're reading Anti-Fragile. I read that a couple years ago, bro. It took me like. It's the most effort I've ever put into a book with understanding about 30% of the book.
Yeah. So I was reading. I picked up.
So dense.
I picked up like a game theory book, and I put it down because if you think this book was dense, this game theory book was just like it's like Jim and Sam. Sam has 3 choices. Mike's got 2 choices, and who has the best? It's like this crazy just math book where I'm sitting there doing the math and I'm like, why am I reading this? Like, it just makes me feel so stupid. So I had to put that down, and Anti-Fragile was the next one, which relative to those two, this one seems much easier to read than that Game Theory book. But again, a little dense.
I was just talking about the wording, how Nassim Taleb just speaks. It's just over my head.
Well, so I picked up the other book that you had on his that you had on your counter, like the littler one. That.
Oh yeah, that's my next up. What's that called?
I just got it. What the hell is it?
Things That Gain from Order.
Yeah. So that one builds off of Anti-Fragile.
Things That Gain from. Oh no.
Oh, I'll pull up the title. But so I had both of them, and I'm like reading the shorter, the tinier, Skin in the Game.
Skin in the Game, yeah.
But Skin in the Game builds off of Anti-Fragile, but Skin in the Game is a much smaller book. So I started reading that one, and he keeps referencing Anti-Fragile. So I was like, let me go back and just read this one first, and then move on to his somewhat sequel, then reading them in reverse.
Yeah, what have you gotten out of Anti-Fragile so far? That was a really good book.
So there was, I posted it like a few minutes ago, there was like one line about how they talk about like markets almost need crashes, where as much as we want to fear them, we don't want them to happen, it just makes everyone very weak. Or not us weak, or traders, it makes like the companies weak. They get lazy, they can kind of do what they want, and then when those crashes occur, everyone kind of gets caught with their pants down. So one of his examples was, the more frequent kind of we have these, it flushes out the weak hands or the weak businesses. The stronger ones kind of come out, and it just keeps people at bay. But that's only been the only really relevant line that I can relate to anything trading. But yeah, definitely a dense book. But
yeah, I just remember in that book it was something that really stuck out to me. We look at like corporate executives as having like the best jobs or things like that. Just that's kind of what people think. And really, the book gets into how that's the complete opposite. They're the most fragile jobs. Mm-hmm. They get fired. They're pretty much done. Versus like an entrepreneurial job. Mm-hmm. You control your own destiny at the end of the day. So you are anti-fragile versus the most fragile corporate executive.
I just finished like that chapter where he gives the example. It's like the two brothers that live in like London, and one is the black cab driver, and the other one is the corporate guy, and they both make the similar salary, and the corporate guy feels safer, where the black cab guy always feels kind of like lower class, where the black cab guy can work till he's 80, 90. That's a skilled profession. No one else can kind of replace him, where the corporate guy, it's someone else's call. If they downsize the department, he's out, and he's out of a job. He's 50 years old. He's not really easy to rehire. And that's kind of that example where I think a lot of people, they want that corporate job, which has its securities, but then if you get cut, it is what it is, where if you trade and you make a bunch of money, you do good.
Yeah, or just figure out your own business, entrepreneurial spirit.
Yeah. All right, Chick, I think
that's it.
I think we're done. I think we did it.
All right, done for the day. I'll catch you guys next week. Give us a little like, subscribe, I don't know, comments, give us some questions. Other than that, catch you guys next week.